Where to keep your idle money? In the saving bank account where the interest is only around 2 to 2.5%. A big no. Invest in the stock market where there is no guarantee of return and then there is a huge risk, huge volatility. So a big no. Then where to keep it? I'll tell you the secret today. But before that, subscribe the channel and get more insightful videos like this. Now understand what is an ideal money lying in your bank account. It is generally a liquid money which you would need for your immediate requirement, like in 3 months, in 4 months or 6 months, or maybe over a period of an year. It is generally an emergency fund, or you are maintaining some money for your next big expense which is upcoming in 3 to 6 months. So where to invest this idle money? The secret is liquid fund. This type of fund is specifically crafted to invest the idle money. It is highly liquid. That means you can get your money within a day, and it will also give you a good return of around 6 to 8% with zero risk. Type of investment. Liquid fund is basically a debt mutual fund which invests in securities, having a low maturity of around 91 days. Liquidity is very high. That means you can even withdraw the money within a period of 1 day. Risk profile, very low. That means your money will remain safe. Return is very reasonable, around 6 to 8%. So with this background of liquid funds, where to invest the money, because there are lots of funds available in the market. So how to identify a good and a better liquid fund? I'll tell you the parameters or factors to identify the best liquid fund for you. First, historical returns. Always check the historical return of a liquid fund spanning over a period of 1 to 3 years. Generally, the fund which gives you a return of around 6.5% to 7.5% is considered as a good liquid fund return. Second, size of the fund. The larger the size, the better it is. It is generally considered as AUM. Third, expense ratio. Lower the expense ratio, the better it is. So the range of the expense ratio of the fund is generally ranging from 0.1% to 0.2%. So lower the expense ratio, that means you pay less to invest money in that liquid fund. Fourth, quality of portfolio. It should be highly rated AAA portfolio. That means the securities in which the liquid fund invests, it should be AAA. Fifth, exit load. Make sure the exit load is zero after a cooling period of 7 days. So that means once you invest in a liquid fund, you should not withdraw within a period of 7 days. But if you withdraw, there is an exit load. Now I have done a quick comparison considering these parameters or these factors. The 3 best liquid funds are Aditya Birla Sun Life Liquid Fund, Edelweiss Liquid Fund, PGIM Liquid Fund. Make sure you write this and do a quick comparison and opt one of these to invest in the liquid fund. Now you have the surplus or the idle money. Now what you should do? First, maintain an average balance money which is as per the law or the regulation of your saving bank account. Generally it is around 10,000 or in some accounts there is 50,000. So beyond that money, do not keep the money in your saving bank account, because whatever you are saving in your saving bank account, it is giving you a negative return, because inflation is 5% but the interest rate is 2.5%. Your money is deflating. Now second step, split your entire money in 2 different time periods. One time period 0 to 3 months. The second time period is 4 to 12 months. That means if you need a money within 0 to 3 months, there is one category. If you need a money within a period of 4 to 12 months, different category. Third, invest category A 0 to 3 months in one liquid fund. You can opt any fund. As I mentioned, basis the parameters. The category B, that is 4 to 12 months, invest that money in a different liquid fund. This is called diversification, because you need an immediate fund 0 to 3. There should be a low expense ratio but a maximum return. Try for a maximum return. But in 4 to 12 months, you can consider an expense ratio but a good portfolio with a good returns with low risk, right? So later on, if you want to switch from liquid fund to an equity fund, from debt fund to equity, you can easily switch as well. So this is how you keep your idle money invested in liquid funds. So I hope I've given you an insight to invest your idle money by not keeping in the saving bank account, but invest in the liquid fund so that you can earn more with low return. And later on, you can even convert that or invest that money in the equity funds after 1 year. So let me know if you like this video and please do subscribe. This is Rahul Jain signing off.